Hi, my name is Jim Parker. I've been selling businesses for nearly 25 years now, and I specialize in selling auto-related businesses. And I'm really excited because today we have with us Ford Williams. He's with Live Oak Bank, and he specializes in doing SBA loans with buyers looking to acquire auto-related businesses. So you can see, Ford and I, we mesh really good together in what we're doing. And I'm going to tell you, how can you forget the name Ford when you're specializing in auto-related businesses? I don't think anybody can ever forget that, Ford.
Jim, thank you so much for having me today. I'm looking back now, and I have been financing small business owners for the last 17 years since we started Live Oak Bank back in 2007, 2008. And Live Oak has always taken a vertical approach to lending with specialized teams built out within the bank to just focus on lending to specific industries. So in 2018, me and a couple lenders here came together, and we started lending to the automotive repair space. And it's just been a wonderful space to lend to, getting to know true owner-operators all over the country. Live Oak Bank is the largest small business lender in the country. We're headquartered out of North Carolina, but we do loans in all 50 states. And we all have a wonderful passion for owner-operators.
That's fantastic. You know, Ford, I got to tell you, that's why I picked the vertical too, is because, you know, I've been practicing business brokerage for 25 years, but I think when you get down into a vertical and you just get to know that industry inside and out, I think it just adds so much more value to both the sellers and to the buyers. And like when me and you are working together and you're working with other people, just all on the same page, and you're concentrating in that industry, I just think that's the wave of the future. And I think more lenders and brokers should specialize in industries. And I don't know if there's not too many brokers that specialize in different industries. And I think Live Oak's the only bank that I know of that does that. Is that how that is?
Yeah, you know, we have always felt, you know, that the model of verticality was important. In 2007, if you were not a veterinarian, you couldn't get a loan from Live Oak Bank. That's how specialized we were. Today, we've got approximately 35 different industry teams within the bank focused on specific industries. We also do have general loan officers that can look at buy-sells across any industry where we don't happen to have a specific team. But to your point, Jim, all I do every day is look at automotive repair shop profit and loss statements. And so, you know, when you perhaps introduce us to a potential buyer of a shop for sale, we're going to be able to quickly, you know, one, review those financial statements, understand the story from the seller's perspective, and then quickly be able to work with the buyer and have an educated conversation about what we typically see in the industry. And again, you know, we don't have branches all over the country, but we spend half of our time in the air going out to meet with buyers face to face and really get to know them and talk through their business plan as they're, you know, sometimes getting ready to do this for the first time.
Yeah. So this is great. I want to start off, you know, because we might have sellers and buyers listening to this right now that, you know, are in the auto-related industry or want to get into that. And, you know, they may not know too much about SBA loans. So I kind of want to take a step back for a minute, explain SBA loans. And if you're listening out there, you know, and you can elaborate on this because, you know, I'm going to tell you from my perspective is that Businesses that typically sell for under $5 million in my world, and to about 500, $750,000 enterprise value to about $5 million, they're typically acquired with an SBA loan. And then when you get bigger than that, you're selling your business for 10 million, 8 million, 10 million, 15 million. It's a different world in my game because now we have private equity players coming in, industry players. Maybe it is being backed by a bank. But today we're going to be specifically kind of targeting that, sales price of about $750,000 to $5 million range. Most buyers in that range are going to be doing SBA loans, and that's what we're going to be talking about. Ford, if you could just give a real quick rundown of what an SBA loan is and what the benefits of an SBA loan versus just a regular business loan.
Sure. Well, first I'll tell you why banks like doing SBA loans. If a bank, and any bank can do an SBA loan. Live Oak, as I mentioned, was started in 2007. We became a bank in 2008, and our business model was to do SBA lending to a niche industry. So any bank can do an SBA loan, and the reason banks enjoy the SBA program is because 75% of that loan is quote-unquote guaranteed by the United States government. So let's pretend that we do $1 million SBA loan for the acquisition of business assets, goodwill, and equipment. And let's hope this doesn't happen, but if that borrower were to never make a payment and hand us the keys over to hand the landlord the keys over to the business and say, I'm out. And we are getting ready to take $1 million loss on that loan because it didn't include real estate. The resale of the equipment doesn't, not a whole lot of collateral value there. And so for the purpose of easy numbers, let's say we're getting ready to take $1 million loss. Well, if we did everything right throughout the SBA application and approval process, the SBA will actually, at the end of the day, come back and offset our loss by 75%. So on that $1 million loan, we actually only have $250,000 of exposure if we do everything right. So that's why banks like the SBA program and the guarantee. And the government has this program in place to promote banks lending to small businesses. Now, borrowers like the SBA program mainly for two reasons, and I'll throw in a third. One, it's typically a smaller down payment or equity injection. Often on someone's first acquisition, think 10% of the project. The other reason that borrowers like SBA loans is because you get a longer payback period. So on real estate, you get a full 25 years to pay the loan back. And oh, by the way, that loan that includes real estate might also include the business purchase in there as well. But when real estate's included, typically the payback is a full 25 years with no balloon payments. Very modest prepayment penalties just in the first 3 years if you were to pay the loan off. But you can always pay ahead of time without penalty. On a loan that doesn't include real estate, the payback is going to be 10 years. There will be no prepayment penalties whatsoever, if, for instance, you wanted to refinance with another lender, even in year 1 or 2 or 3. No balloon payments, and you can always pay ahead of schedule again with no penalty. The only other thing I'll mention, just for those that maybe have never taken out a business acquisition loan before, is on a non-SBA loan, conventional loan for real estate, you'll often see that amortization over 20 years and a 5-year balloon payment. All right? And then what you'll also see on real estate is that bank is only going to lend up to a certain amount based on the appraisal or the purchase price, whichever is lower. That's where you hear those 3 letters, loan to value. So it's not uncommon for a bank to say, hey, look, we'll look at conventional financing on the real estate. It's going to be a 5-year term, 20-year AM, and we might be able to go up to 85% of the purchase price or the appraisal, whichever is lower. On a conventional non-SBA business acquisition, you see all sorts of structures. But again, it wouldn't be uncommon for a bank to say, we need a 25% down payment, and we're going to want to make sure the cash flow looks okay on 5 or 7 years for a payback.
Versus SBA for about 2 years.
10 years.
Well, I'm saying for SBA, you look back for 2 years for a 10-year loan.
Correct.
Yeah, and I wanted to add a little light to what you were saying, about, one thing you were talking about the bank's perspective, where 75% is guaranteed by the U.S. government. It is in the bank's interest, and I want the buyers to hear this if buyers are listening. The bank's really got to make sure that those loans are successful, because if the loans are not, if they hit a certain threshold of loans that get defaulted on, the bank can get the rights to get SBA loans taken away from them. So, I don't want a buyer out there to be like, well, 75% guaranteed, or the banks are going to be Ford's going to be very concerned that you can pay back your loan. And they want to make sure they can, because they don't want to have a black eye on their bank, or any bank does not want to have a black eye.
That's right. And the only thing I'll mention to follow up there is Live Oak is a preferred lender for the SBA. Once you sort of reach a level of annual SBA lending volume, you kind of get to their preferred status. It's important to remember, SBA drums up a lot of negative feelings sometimes related to documentation and timeline. But I'm telling you that a good SBA lender processes their SBA loans just as quickly as their conventional loans. Keep in mind that as a preferred lender, everything that you're sending us, our underwriting process, our approval process, our closing process, it all happens in-house at Live Oak Bank. To get your loan approved and closed, your package does not leave Live Oak Bank to get secondary approval by the SBA. It is all done in-house under our own authority. And to your point, we've got SBA auditors in here all the time, checking our files and making sure that our loan default rates are well within their thresholds.
And the files are put together right. You got the proper documentation and things like that. And another thing I wanted to clear up too. Obviously, I hope everybody's listening. The SBA stands for the Small Business Administration. It's a government agency. So when you do an SBA loan, you're not getting the loan from the SBA, the government. You're getting the loan from the bank that's just being guaranteed by the government. I want to point this fact out too, because I don't want anybody listening to be misconstrued and think that, the government is this is a bad situation, the government's just handing out money. No, the banks are handing out the money. The government is just guaranteeing up to 75% of that if there's a default. The government actually makes money from the SBA program. It's one of the few government agencies that make money. Isn't that right, Ford?
That's right. So in your SBA loan, the bank will not charge an origination fee like you would see in a non-SBA loan. However, you will see a line item called the SBA guarantee fee. And I'll mention that post-COVID, for an SBA loan under $1 million, that fee has gone away. For a loan above $1 million, you will see an SBA fee built into the loan, and it goes straight to the SBA, and it is how the SBA funds itself. Essentially, those fees, each time an SBA loan closes, the way I always explain it is it goes into a big pool at the SBA and is there to cover those bank guarantees when banks have loans go bad. If I'm not mistaken, I think you just mentioned this, Jim, the SBA is really the only
one of the only
self-funded government agencies that doesn't require additional taxpayer dollars from the budget.
And I've heard that they actually make a little bit of money that they give out to other government agencies. So I wanted to really point that out. This isn't like the government giving handouts. And this is another thing I want to point out is, like in Canada, I mean, Canada's like just north of us. They don't have any kind of SBA loan program. Like, we are so lucky in the United States of America to have the SBA, because the SBA not only allows one business owner to acquire a buyer to acquire a business and be a business owner themselves. And right now we're facing a situation, according to Forbes magazine, that 40% of all small business owners were born before 1964. So we got a large population of business owners getting ready to retire. So younger people can come in and buy those businesses, keep them running, keep people employed, keep the economy going. But it's also people going out there wanting to start businesses from scratch and get SBA loans, which is more hurdles you need to go through. But the SBA has been a big engine to the capitalism in our country, to keep our country, the growth and economic well-being of our country going. And we should be really thankful that we have the SBA out there for us.
Yeah, Jim, it brings to mind what the SBA did during COVID for their borrowers.
Oh, my gosh. Yes.
Of course, the PPP loans that we processed.
Even the EIDL loans?
And the EIDL loans. But if you had an SBA loan, believe it or not, the government proactively made 6 months of your loan payments on your behalf to the bank and did not tack them on to the end of your loan.
Yep. That's great. They were fantastic. They were fantastic. They kept many businesses afloat during that COVID situation. So, this video, and at some point forward, I want to do a video that's more from a buyer's perspective. This video is going to be more for sellers. There's sellers are listening out there. And I kind of want sellers, if you've got an auto repair related business out there that's going to sell anywhere from about $500,000 to $5 million, and when you start getting into $4 or $5 million, even $3 million, that could go to private equity group. But let's just talk. Most businesses, $500,000 to $5 million in the auto-related industry, are going to be SBA loans. Most of them are. I want sellers to understand if their enterprise value falls within that range. Like, let's talk about their financials, for instance. And, because if they're getting ready to retire in a couple years from now and they're thinking about selling their business, we want to make sure that, one, that a buyer is going to want the business and they're going to make offers and we're going to go under contract. but also we got to get the deal done with you guys. I got to call you up, Ford, and go, hey, Ford, we got this deal, got a great buyer, got a great seller, let's make this work. And we got to make sure, and the financials are a critical part of that. So what are you guys looking for, or what can a seller keep in mind from a financial aspect, to best qualify for an SBA loan?
Love it. Love it. So where to start, right? Because, Jim, as I mentioned to you on some of our previous calls, we're always working with owner-operators, small business owners, who we are wonderfully passionate about.
Love them.
We know that if the vast majority of our borrowers, we know that if their business cash flow is tight, then it's not like there's millions of dollars sitting under their mattress at home to help repay the loan. And so you'll see me talk, often about cash flow. We are cash flow lenders. And so as a seller who is perhaps looking to retire, a true owner-operator that is thinking about succession planning, thinking about maximizing the value of his or her business, and working with you, Jim, to help potentially find a good buyer. My advice for any owner-operator, and especially in those months and years prior to you thinking about selling, clean financial statements are of the utmost importance, right? It's not uncommon for small business owners, true owner-operators, to sometimes want to offset their tax liabilities, right, and not have their small business show huge profits, which we completely understand, see it all the time. I actually have a couple auto shops myself, repair shops myself, and it took us a year or two of sort of surprise tax bills before we kind of wanted to strategically manage the business, thinking about income taxes. With that being said, your lender, and Jim, you're going to do this the first time you look at the financial statements, I'm sure, your lender's just going to want to get a true feel for the profitability of the business itself. And, a good bookkeeper, or if you're doing the QuickBooks on your own, that's perfectly fine. But I just want to stress the importance of having, quality financial statements to produce, right? That's goal number one, is to be able to, in an organized way, with quality financial statements, show what your business has done over the last 3 years in terms of revenues, expenses, and profitability.
And if I could just interrupt you real quick before you go on to point number 2, I can't agree with you enough, Ford. I always like it when a business owner calls me up, a couple years before they're ready to sell, and they say, hey, I'm thinking about selling my shop, or I'm looking to sell my collision center, and just want to pick your brain. And I do what's called an assessment call. I'm trying to ask them a series of questions to see what holes there might be in the business that we need to fix over the next couple of years in order for them to maximize their sales price and get the best terms possible at the end of the day. And one of the most critical things that we go over is what you said was the most important thing to you, and I know it's the most important thing to you too, is the financials of the business. And a lot of business owners out there will use their their business debit card as a personal debit card, and they run a lot of personal expenses through the business, and and they're trying to reduce that tax liability, and you talk to them, and they're like, "Well, I'm making that kind of money, and I can prove it," and da 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 da. It doesn't work that way. Buyers don't want to go through your general ledger line item by line item trying to pick things out, and lenders aren't going to do that, and the underwriting department's not going to do that. So, what I always tell the sellers is that, like for every dollar that you're trying to save because of taxes, or every dollar that you're writing off, you might be saving 37 cents on that dollar if you're in the highest tax bracket, saving 37 cents on that dollar. But when you go to sell your business, you're going to lose out on $3, $5, $10 or more. So you're saving pennies on taxes, and you're losing out big time on dollars on the back end. And the biggest thing, just keep your business expenses and your personal expenses. You should be doing that anyways, but especially do that when you're getting like 2 or 3 years out before you're ready to sell the business, so that you can maximize that sales price. It's going to make the due diligence process go a lot easier and smoother. You're going to maximize your sales price. And then Ford's going to be able to get the loan done. It's not just Ford. It's any SBA lender out there is going to need it. And I know if you're a business owner, you're probably hating that. You might be swearing at the screen right now, but I'm just telling you the truth. That's probably the number one thing that you can do to get your business sold. And 80 to 90% of the businesses for sale out there do not sell. That's a national average. So only 10 to 20% on average, nationwide, are actually going to sell. I sell 90%, but I'm selective on the businesses I take to the market, and packaging it and strategies and whatever. But I'm just saying that's number one thing. So I'm sorry to interrupt you, Ford. I just wanted to stress what you were saying, because it's so important.
Well, and again, with our sort of industry expertise, we're looking for, based on purchase prices, right? We are looking to see if a quick oil change location has been historically operating at a 23% margin, or if a tire and auto center that is making up its revenues with 50% sales on tires and 50% service is doing a good job controlling its cost of goods and payroll expense to produce that normal operating margin that we like to see for a tire and auto center. So again, for us, it's always going to get back to cash flow. And from a seller's standpoint, and you already hit on it, they're going to be able to sell their business for more when they can show through organized, clean, quality financial statements and tax returns a clear picture related to their business's true operating expenses.
You said a key word for it. You said organized, and organized is another thing too. Is the banks don't ask for it typically, but bank statements, merchant service statements, all the supporting documentation, invoices, things like that. You should have all organized and filed, because even if the bank's not asking for an SBA loan, the buyers are going to have their opportunity once they go under contract to do their due diligence, and you want to be able to prove all this stuff beyond a reasonable doubt. And I know how small business owners usually have like a very visionary, big picture type people. They're not usually very good at the details and the small stuff, and that's what's made them successful. But you should have them organized, not only so you can give it to the buyer, but when you need to get stuff to the buyer, get stuff to the bank, you're not running around trying to find this stuff because you don't know where you put it. So that's another thing that you should start doing a couple years out is, start creating files, have a tax return file, bank statement file, merchant service statement, just have it all organized so that if somebody asks you for something, boom, it's right there. It'll make your life so much easier in due diligence. So go ahead,
Well,
Ford.
I think you will enjoy the fact that, we often see an inconsistency in 1 year's operating margin, right? You lost a longtime manager in 2022, but found that right manager mid-year 2023. um, with our sort of industry expertise and ability to, you know, get to understand the story, we have a lot of faith in the industry itself, right? Related to number of vehicles on the road. And so I want to mention to potential sellers out there that Live Oak does a really good job of understanding your story. And again, if 1 year of P&Ls includes some non-recurring expenses related to you paving your parking lot or
Put an air
going out
conditioning
and
unit
buying
on
a new
top of your
piece of
shop.
equipment. Yeah, we're gonna work through that and factor that in, and Jim's gonna do a good job relaying that story. But again, just getting back to Jim's point, you got to be organized about it, and the more organized you are related to your year-to-date financial statements, working with your CPA on a timely, regular basis, it's just going to make the process smoother.
Ford, I'm so glad you brought up that point about those one-time strange expenses that are unlikely to occur again, like paving your driveway or putting an air conditioning unit on your shop, because those are things that are not likely to happen in a long time, and we can add that back. And from a business broker standpoint, what we do is, and this will be another video, but just real quick, we take the net profit of the business and we add back the owner's compensation, because the new owner is going to be getting that compensation. We add back interest expense because you're going to be paying off your loans free and clear. You're going to be paying off your loans on the day of closing. The buyer's going to get it free and clear. Add back depreciation because it's non-cash expense. Adding back one-time expenses like he mentioned. Adding back benefits that you might be receiving from the business. I'm going to talk from a business broker standpoint now, not an SBA lender, but things like 401k plan for yourself and your family, things like health insurance we can add back. Bank's a little bit different. And then might be some other expenses that may not really be great business expenses that we can add back as well, but not a lot of those, and that's something that we can talk about on the phone. And that's how we come up with that bottom number, and that's how we price a business. That's how the bank's going to look at it and say, yeah, we can get that loan done or not get that loan done. So I'm glad you brought that up, those one-time expenses, because I don't want sellers to be like, oh my goodness, I can't, I got to be really careful about every little thing. How far back do you look on tax returns for cash flow purposes to get that loan done?
So whenever I send out an email to a potential buyer of an automotive repair shop, potential borrower of the bank, I'm asking if they can provide, related to the target business, if they can provide 3 years of seller business tax returns, a current year profit and loss statement, and if available, it's often nice to have a previous year comparable profit and loss statement. So that's really what we're looking for. We really don't need to worry too much about a seller's balance sheet, right? For us, it's 3 years of tax returns and a current year profit and loss statement. And again, that's just going to allow us to work through that add back exercise that Jim's talking about, and get to what we're looking for as it relates to net operating income. Jim calls it seller discretionary earnings, perhaps. Some folks call it EBITDA. But what we're looking for is sort of that historical free cash flow of the business after true operating expenses that we consider available to service the debt and pay the owner. And so that allows us to calculate the ever important debt service coverage ratio. And again, some banks have hard and fast debt service coverage requirements. Some banks have hard and fast credit score requirements. I'm probably jumping ahead here, Jim, but this is our space. This is what we do all day, every day. We are going to look at every opportunity on a case-by-case basis, and kind of make an informed decision with the potential buyer and with you along the way. So I don't want sellers to get too hung up on, what if we look at it this way and it's only throwing this much cash and is that going to hit the bank's debt service coverage ratio? Like, don't worry too much about that.
I think being right. I think you're right. They should reach out. Like, if you're a business owner out there right now and you're thinking about selling now or you're selling future, I mean, just reach out to myself and let me do the ad backs and let me work with Ford and let's figure out what we need to do. Don't jump to all the conclusions right now just watching this video. The best thing is pick up the phone and let's talk and let's communicate, because I don't want to scare you when I say just call us is the best thing to do.
For sure.
So let me ask you though, the financials are important. Them being clean as possible is important. If somebody is listening to this right now, what's the least amount of years of full year tax returns do you need that are, in good shape in order to get a loan done? Is it the 3, or can you do 2 years? Where do you sit with that, Ford?
Yeah, I mean, to be honest, Jim, we're gonna place a lot of emphasis on the previous year tax return. That's really the 12-month period. So today is October 18th, and we're going to look at a seller package that includes 21, 22, and 23 tax returns and a, January through August profit and loss statement for 24. 21 and 22 are going to, tell us a story related to revenue trends and margins, but I think you will see us sort of focus a lot of our attention on 2023. And I was actually just working with one of our credit officers today, and we were talking a little bit about discretionary earnings to purchase price, and I was actually sort of able to kind of walk her through why this particular buyer was very comfortable with this purchase price, and the conversation really focused primarily on 2023 and year-to-date 2024.
Yep. Okay. All right, great. Anything else about the financials that you want to touch base on before we get ready? Is there anything else to, kind of let a seller know this is what you should do, or, to get in the best position possible, or any major red flags that we haven't covered already without getting too big into details?
Jim, I don't think so. I think as long as sellers can be prepared to answer any questions related to inconsistency around the trends, whether that's top line or operating margin. I gave an example earlier related to, you know, if a key employee went out in 2022, that could affect a couple things. It could affect top line. It's going to affect payroll. It could affect your inventory management. And so I think if sellers can come prepared really through the financial statements to be able to talk to any inconsistencies related to trends, that'll be important. But no, I think we touched on all the high topics there.
Is there any other major any more documentation that you need from a seller?
Not really. The only
I mean, we'll have titles, titles on vehicles, and there's miscellaneous stuff like that.
Yeah, and so we'll probably touch on this in a little bit, but from a, as you're working with a seller through like that letter of intent process and sort of draft purchase agreement process, and the bank is working with a buyer, and we've issued a term sheet and have started our underwriting and approval process, we're really, at that point, just working with those financials, tax returns, and profit and loss statements that I mentioned.
And then as we work towards closing, all the miscellaneous documentation that you're going to need, because the seller, you will have to come up with the titles in your cars, and there's going to be a lot of little miscellaneous
couple things during closing.
Yeah, payoff letters for loans you might have, but that's all stuff we'll take care of. But that's the main stuff. It's the buyer that's got a lot of stuff that they really have to submit to the bank. But let's talk a little bit about valuations. You guys are going to get a actionable appraisal done on the business, correct?
Correct. The good news is, Jim, you're going to be, in many, in most of these instances, really, helping quarterback this process, right? And so I know you yourself, who sees a lot of these opportunities and is very selective about the shops that you will work through sort of that listing process with, you're going to be working with a value in most, if not all, cases that makes sense, right? It makes sense for the buyer, it makes sense for the bank, it makes sense for the seller, and our underwriting and approval process is really pretty straightforward. And unless there is some reason, which I'll probably have a hard time thinking of one, we're going to go ahead and move forward with our loan approval and commitment letter to the buyer. That's always nice for the seller to receive that update that the buyer has received his commitment letter and is now starting the closing process. Yes, if there's real estate involved in the transaction, we will at that point order a real estate appraisal. That's also the point in the process where we reach out to one of two firms to do a third-party business valuation. And again, these are SBA approved firms. They're national. They don't have to visit the location or anything like that. I don't think typically they are really working with the seller, whether that's email or phone. It's really our financial statements that we've received from you and the seller, our analysis, your analysis of the cash flow,
maybe the sale.
Their sort of research on the industry, and they are going to produce a business valuation that you know, 9 times out of 10 hits the purchase price right on the nose.
Yep, yep, yep. Yeah, let me put that kind of into perspective. So, if you're a business owner out there that's thinking about selling your shop and then, shop, that's what I'll do is, I'll collect your financials first, and I'll do is I'll go through, I'll ask you a bunch of financial questions, and you'll know the answers, and if you don't, it'll be easy for you to get those answers, and I'll come up with that discretionary earnings number, or if it's a bigger business, it's going to have an enterprise value of $3 or $4 million or more, adjusted EBITDA number, and that's how I price the business. And what I do is before I go back to you on what that most probable selling price is, I would call Ford and go, hey, Ford, these are the financials. These are the ad backs I came up with. This is the story behind the ad backs. This is why I'm doing it. He's going to probably not accept some of the ad backs that I do. That's normal. And then from there, I'm like, hey, this is what I'm thinking about as a purchase price. And what I'm trying to do is I'm trying to get Ford as the lender on board before we even go to the market. So I'll do that behind the scenes before I talk to you as a seller. And then I come back and say, hey, this is the value I came up with, this is why, and this is how I came up with it. And oh, by the way, I've already had it pre-screened by an SBA lender. I feel confident that we're going to get the lending done. And that lending, like we keep saying, is critical when you're looking at that $500,000 to $5 million mark. So, anything you want to add to that?
No, I think you summed that up perfectly. I mean, having me in the background, kind of doing some quick back of the envelope cash flows related to a potential buyer, what they would most likely be looking at in terms of leverage. That quickly allows me to get to, what their potential loan payment on that business as the new owner would look like. And so that's kind of what I would be doing in the background and giving you some good feedback there, Jim, to get back in touch with the seller.
In my nearly 25 years of doing this, you talked about the appraisals usually come on target. My nearly 25 years of doing this, I only had one appraisal come back that came in lower than, a lot lower actually, than what we had gone under contract for. And I went through the appraisal, and there was some assumptions made by the appraiser that were not correct. They had just assumed certain things. And this wasn't your appraiser, by the way, Ford, and we didn't do the deal together. And I came back and I just wrote a little bit of what the real things were going on in the business, not the assumptions. And the appraiser bought into them because they were true and accurate. It wasn't we were trying to get one over. That's what really happened. And they revised the appraisal and we got it done. I don't think I've ever lost a deal, Ford, in my 25 years due to an appraisal coming back. And that's because you do the correct things up front. You know what I mean?
Exactly.
You're dealing with you're not dealing with an absurd asking price.
Yeah, we're all putting a lot of work in on the front end. The sellers you're working with, you, the lender, the buyer, and typically, as the parties work together, and everyone is kind of understanding what the roles are and what the end goal is to get a good transaction opportunity that's going to be good for everyone. And when it is good for everyone, that means it was valued at the right price, and the seller's going to walk away happy, and the buyer's going to enter into a wonderful new chapter.
Yeah. Oh, fantastic. Yep. You're absolutely right, Ford. All right. Are there any deal structures that make it easier to secure an SBA loan, when acquiring an auto-related business?
We see it all. Going towards kind of buy-sell situation. You've got transactions that just include business assets. You've got transactions that include real estate. You've got transactions that include real estate and the business. We could talk a little bit about that. I touched on that earlier related to terms. You've got a couple SBA programs. The one that, Jim, we work on the most is that 7A program, which I really like. It, again, from a seller standpoint, just so that they can visualize what the buyer is most likely working through. So you've got the purchase price. Let's assume this is a sale of a business. There's no real estate involved. And so the buyer's going to take over the goodwill and the existing equipment, essentially. So you've got the purchase price that everyone has agreed upon. And then you've got the soft cost in the loan related to the SBA fee and some closing costs, an attorney that's going to close the loan and produce the documents, et cetera, et cetera. The line item that we think is hugely important in these acquisition opportunities is the operating capital, the working capital line item. And so, just as the sellers all know, having some cushion in your operating account as a new owner-operator when they take over the business is hugely important. And so in that loan structure, depending on what the buyer needs, we're going to include $50,000 to $100,000 of working capital in the loan. Some of that will be for, immediate operating expenses that, they're going to be responsible for as soon as they take over. But it's not uncommon if the buyer needs a little additional cushion for any new marketing initiatives or minor improvements or a piece of equipment. So I mentioned that working capital line item just to let you know and give the sellers an ability to visualize sort of this project structure, our ability to build in a little cushion for the buyer.
Yep.
So hopefully that allows a seller to visualize what we're talking about as it relates to total project cost. Purchase price, soft cost, some operating capital, and then most buyers are going to hope to be able to complete this transaction with coming to the table with about 10% down of the total project cost, if that makes sense.
And you guys are financing the 90%, and then the seller walks away on the day of closing. So what I wanted to go over too is make this point real quick on these smaller business. I shouldn't say smaller, but businesses in the range that we're talking about today. The working capital is usually not included in the sales price. Ford's Bank would be giving the buyer the working capital. Bigger businesses, the bigger you get, as a seller, you are giving a buyer the working capital requirements. I'm making this statement both to the buyer and to the seller because sometimes I get a buyer on a smaller deal that's like, oh, the seller should give some working capital. And then on bigger deals, the seller's going, I don't want to give up my working capital. So on the deals of $750,000 to a few $1,000,000, banks are usually giving the working capital. Seller's keeping it. On bigger deals, the buyer is going to be asking the seller for the working capital. Do want to make this point, though. It kind of all washes out in the end because on these businesses that we're talking about today, we're working off of what's called, or I call discretionary earnings, where we're assuming whoever buys the business is going to be a single owner operator. When you're dealing with a bigger business, we're going off of what's called adjusted EBITDA. And so it's all the same add backs that we're doing, but we're assuming that whoever buys it isn't going to be an owner operator. They're going to be putting a manager into place. So the EBITDA number, the adjusted EBITDA number is lower than the discretionary earnings number, but the multiplier for the EBITDA number is higher than it is for discretionary earnings. So it kind of evens out. And then when you add that working capital thing in there, that makes the difference too, because the adjusted EBITDA is assuming that the seller is going to be giving up some working capital. The discretionary earnings number, they're not giving up that working capital. And so it kind of all plays out. So if you're listening to it, don't be like, I'm not getting the working capital, I have to get a loan. No, it's all played in as you're pricing the business. It depends on the size. Did that make sense, Ford? I know you know what I'm talking about. I just want to make sure you think I made sense, because I'm trying to say it really quickly.
No, makes perfect sense. I think, from the lender standpoint, we feel it's our responsibility, to set the buyer up for success with the right loan structure. And when we're able to do that, that allows the seller to walk away happy.
Yeah. So what kind of time frame are we looking at, Ford? Buyer puts in an offer, it gets accepted, and we counter offer back and forth. Everybody executes the offer. Come to you and say, Ford, and typically at this point you've already pre-screened the business and you've already had conversations with the buyer. But now that it's official, it's under contract. What kind of time frame can we be telling the seller on that from that point to closing?
Yeah, so the good news is when we've got somebody like you, Jim, quarterbacking this thing, we've already got a complete package on the target business. We've worked with the potential buyer to pre-qualify them once they have been introduced. They've gone through maybe an LOI process, and all of a sudden we've got we work with buyers at all times. We work with sellers at all times in the process. And so long about that first draft of the LOI, when there is essentially an agreed upon purchase price, that's kind of when we're ready to go, okay? And again, in these transactions that we're working on together, we've got the buyer pre-qualified and we've got the seller information. And so really, once we've got that agreed upon purchase price, we're able to send that buyer sort of the official term sheet or proposal letter, all right? That signed proposal letter back from the buyer, again, so to get that drafted, what we really need is that agreed upon purchase price. So I'm sort of using that as our starting off point that allows us to issue the term sheet. So buyer says this looks good. How long is it going to take me to get approved? And I'll say, send me the term sheet back and we'll introduce you to your underwriter. All right. Good news is most of us are all right here in Wilmington, North Carolina, and the underwriter working on the approval sits right outside my office. And we've got a wonderful team. We all sort of work in pods. Our underwriting group will be familiar with this type of transaction. And we ask for about 10 business days to turn that term sheet into a bank commitment letter. So that's kind of our timeline as it relates to the official loan approval. And from there, we're going to issue that commitment letter to the buyer, which should look just like or very similar to the proposal letter.
Yep.
And that kicks off the closing process. And I would like to say that we can close a business acquisition over a 4-week period, let's say 4 to 6, to give me a little breathing room.
From
And
the time
then
of the commitment letter, right?
commitment letter to funding, give us 4 to 6 weeks. And then if real estate's involved, it typically is going to stretch out maybe to 6 to 8 weeks as the bank attorney starts to engage the title company and work through that process. But they can all happen even faster than what I just mentioned. It really is sort of dependent on often how buyers are working and sellers are working through the fund checklist that we're issuing at the closing process.
That's a good point. So, with your time frame right now, from the time of term sheet, which is around the time that the offer is happening and getting executed, to the time of closing, you're talking about 60 days, and you're saying it could be sped up a little bit on that. It could be dragged out a little bit on that. I hate to say it. I usually see it dragged out a little bit more because, look, buyer's really, motivated to buy. The seller's really motivated to sell. But, reality kicks in and the seller's got a business to operate and run. Documentation's being requested by the buyer and by the bank. A day or two here goes by, a day here or two there goes by, and you do that over a several-week period of time. You see delays on that end, and then a lot of times a buyer, when they're buying a business with an SBA loan, they're currently employed and they're not pulling the trigger yet to quit, so they lose a day or two here. So, I'm just giving a realistic picture here. I think 60 days is great. I think you expect 60 to 90 days. Would that be safe to say, Ford? Without
For sure.
being under
sure.
pressure.
No, I think more often than not that target date we see get pushed out. A lot of times that's because, I like to get pretty aggressive. Like I mentioned earlier, as soon as I sort of have an agreed upon purchase price, if LOIs are still going back and forth and purchase agreement hasn't been drafted yet, like, I'm perfectly okay with that. I want to get the buyer and the seller confidence that we can get this thing approved, right, at the price that they've agreed upon. All right. So in many cases, we issue the commitment letter and we introduce a closing officer to the team, and at that point the closing officer is starting to ask about an executed purchase agreement because we haven't seen that quite yet. And as you know, Jim, a lot of times that's when a buyer's attorney has gotten involved, and there's perhaps a seller attorney that has gotten involved, and that purchase agreement, all of a sudden has a bunch of lines in it, and it's been marked up back and forth, et cetera, et cetera. The other thing that I think is important for sellers to remember especially is, we're going to end up needing a lot of documentation if there's a landlord.
Yeah, I was going to say, you brought up the attorneys, and I was like, yeah, I forgot to mention the attorneys, and then one through my head right away is landlords is another one that throws a wrench into things, or a franchisor, is another one.
Yeah. Yeah, but we've got wonderful closing officers. Again, that's kind of how we've set up our teams. We've got 4 loan officers here at Live Oak, myself included, that just focus on automotive repair. We've got a wonderful group of underwriters spread across a few different industries. But we have 4 closing officers that have been with our team dedicated to working with shop owners that are just awesome. They have seen it all, Jim, as it relates to what could happen during a closing process that wasn't expected, but working through whatever needs to be done with all the parties to get this thing to the finish line.
I got and I want to throw out there, it's because it's unusual for business brokers out there to have this. I have a closing coordinator that once it goes under contract, she's a full-time closing coordinator. She's working on our closings. And what's nice about her being full-time, just concentrating on that, is she's dotting the I's, crossing the T's. She's always there. That she's always trying to push that deal going forward. Interacting with the SBA lender, with landlords, franchisors, buyers, sellers, kind of making all that on an everyday process, moving that forward. So that's really nice. And I like to work with the same lenders over and over again. Remember, I specialize in auto, and so does Ford. We kind of start to mesh and get on the same page of, we know what they're going to be looking for. So as a seller, as Ford and his team are working with the buyer, collecting information, getting all that stuff, the whole package together on the buyer, we already kind of know what they're going to be asking from you as the seller, a couple weeks out, and we can kind of give you a heads up and go, hey, by the way, in a couple weeks, the lender's going to be looking for this, and that. You might want to start gathering that stuff up. So that's why I like working with the same people in the group all the time, because you kind of start to get a good feel for each other. So I just wanted to throw that out there too. And Ford's a good guy. And Ford's a really good guy. They do a great job over there at Live Oak. Live Oak is a fantastic bank. So let's see. Is there? What do you think that a seller can do to help, the process go more smoothly, the lending process go more smoothly?
Jim, I think just good communication. There is a lot of emailing back and forth, especially once the closing process gets started. And really, it's good communication with you, right? Because it will be you and your closing coordinator, which I just absolutely love. I mean, when your closing coordinator is in sync with the closing officer at the bank, and together they're in sync with the bank's attorney and his paralegal, it just works. And so I think as we are able to set expectations and are honest and open about timelines, and everybody's communicating, and it's not easy, right? I mean, the seller is running a small business, right?
Yep.
And so it's not uncommon for a lot of this closing process to happen, after normal working hours, and we're okay with that. So I don't know. I love how our team, especially on the closing side, because that's go time, right? That's commitment letter's been issued. There's a purchase contract that's about to be executed, and it's got a timeline. Earnest money has been put up in many cases, and the clock starts to tick. And when we can get all parties just on board as it relates to communication, both on the phone and email, that's always important.
Yeah, moving and shaking and getting there in the thing. And, earlier you made a comment about the price, and I don't want to keep you too much longer, Ford. I'm going to have you say final thoughts after I get done with what I'm going to say. But you had mentioned earlier that it's important that it's a good price for the buyer, a good price for the seller. And, if seller's sitting out there thinking, well, I'm not worried about the buyer, I'm worried about me. Want to point back to, first of all, you probably do. You want to make sure your employees are taken care of, your customers are taken care of. You probably have long-term customers, and, it's the legacy that you're leaving on. Most of the business owners I work with, that's all very, very important to them. And you know, if the buyer's struggling to make those payments, then, you know, the business isn't going to be successful. It's bad for everybody, those customers, employees, everybody involved. But the other thing I want to add to that too is that there is a lot of little things that need to be done from the time we go under contract until we get to the closing table. This isn't like you're going into a situation, you're bartering with somebody, and then both parties are walking away. It's important that both parties feel really good. The seller feels really good when we go under contract. The buyer feels really good, because if one party feels slighted, there's too many things that need to happen. We're not going to get to the closing table. So that was kind of my last final thought. Ford, do you have any final thoughts on your end?
Well, just to piggyback there a little bit, Jim, and I know you've seen this over the years, but the best transactions that I see are when, and it's not always easy, you got personalities involved, you got legacies like you mentioned, but when there is an opportunity for a buyer and a seller at some point during the process to develop a rapport, you know, it's important, right? The seller, 9 times out of 10, is going to have the buyer's best interest at heart, right? Because the buyer, in many ways, is carrying on this location's legacy, right? There's a customer base that the seller has, you know, often grown very close to. There's an employee team that the seller has worked with for years. And so I just love it when we see buyers and sellers develop a relationship, and when appropriate, at some point during the process, we get to hear from the buyer that, you know, I really like how the seller has worked through this. You know, he has mentioned multiple times that he's going to be available and willing to answer the phone if I ever have any questions. And it just sounds like he's got this location, this shop's best interest at heart going forward. So that's always special when you get to hear that from the buyer.
You know, Ford, you made me put me in a position where I lied. I have one final thought now, because you mentioned that. I'm so sorry. But, you know, I agree with you. Like, it's a big thing. Like, when somebody's buying a house or they're buying a piece of commercial property, they could care less who the owner was. They could care less. When somebody's buying a business, they're going to have their opportunity to do their due diligence, make sure everything's accurate and what's been said. But at the end of the day, they are taking a little bit of a leap of faith, and it's really important for most buyers to like and trust a seller. And when we start negotiating that contract and we're going under contract, it's usually because the buyer likes and trusts the seller, and the seller likes and trusts the buyer, and the seller thinks that buyer is going to do a good job with their legacy, their employees, their customers, and their suppliers. And then what typically happens in our industry is, in my industry, I was taught this. I know a lot of business brokers are taught this. It goes under contract. You keep the buyer and the seller apart, you know, and you work to closing, and you get the deal. You work to closing. I am so against that philosophy. I think the philosophy should be that you should engage and you should embrace that relationship between the buyer and the seller. Now, obviously, we can't have the buyer be calling you directly, because they will be calling you every day with questions, and they'll call you 5 times a day. I mean, it'll drive you crazy. I know you'll be like, oh, I don't mind, but you're trying to operate a business. But we do it in a controlled situation where we have bi-weekly phone calls. You know, myself, my closing coordinator, the buyer, the seller. Ford's welcome to come if he wants to. I'm not going to come every time because, you know, I don't want to take too much of his time. But you jump on, and the seller gives an update of what's going on in the business. The buyer gives an update on what's going on with the loan process, any questions about due diligence. Me and my team are communicating all that stuff, and you should be aware of it. But there's nothing more, even though if you're aware of it, It's hearing it directly from the buyer, and the buyer having the opportunity to directly hear it from you. And you guys build a closer relationship, and if there is a hiccup that comes up, you know, it's more likely we can work through it because everybody is trusting each other. Whereas if you like and trust yourself from the beginning, but then, you know, 5 weeks go by, you have had no communication, you're losing that. And I think, Ford, the reason I want to do a final thought is I am in total agreement with you on how important it is to have those relationships.
Love it. Always is special when everyone's working together and paddling in the same direction.
And Ford's going to be like, I'm not going to talk anymore because if I say one more thing, Jim's going to come up with another thing, and I'm going to be stuck here all day. Ford, I really appreciate you joining today. I know I've got a lot of respect for you. I got a lot of respect for your bank. I appreciate you taking the time out, and I look forward to doing many deals with you in the future. So thank you for joining us.
Jim, much appreciated. Look forward to it. Thanks, guys.
Great. Hey, and listen, if you're watching this video and you feel like you got some good information out of it, we got a whole series of videos coming out to help you as a seller of an auto-related business to maximize your price, get the best terms possible, make the whole deal easier. And so I just want to make sure that you're being notified that these videos are coming out. So make sure that you like the video, comment on the video, give us ideas of what kind of videos you want to hear, and most importantly, subscribe. And at any time you're thinking about selling your business, even if it's 2 or 3 years out from now, or you have any questions at all, feel free to pick up the phone and give me a ring. I'd love to talk to you. Well, have a fantastic day, and thank you for watching.